Hey, thanks very much, Brian. The Beige book saying that the economic activity was little changed. Two districts saw modest decline in growth. One reported growth overall. Consumer spending declined further, though high-end retail, as we've heard from some of the retailers themselves, has been resilient. Some retailers saw a negative impact from the government shutdown when it came to consumers. Auto dealers saw declines in EV sales. Remember that there was the expiration of the tax incentive there. Manufacturing increased somewhat. That was good news, but tariffs and tariff uncertainty were headwinds for manufacturers out there. In fact, there's a lot on tariffs in this Beige book here. The ongoing recovery, there was an ongoing recovery noted in the office real estate market. I believe that's something Diana Olick has been talking about. But this is on the sad side here. Community organizations did see increased demand for food assistance, due in part to SNAP disruptions. I don't think I've ever seen anything about food assistance in the Beige book here. Employment declined slightly over the period. Half of districts reported weaker labor demand. That's a large amount. Employment was limited using hiring freezes and attrition, though, rather than layoffs. And we did get confirmation of those low layoffs again in the jobless claims number. And now here we go. This is pretty interesting. A few firms say that AI replaced entry-level positions or made existing workers more productive enough that it allows business to curb new hiring. And employers did have an easier time finding workers, though in some sectors like construction, it was tough. Wages, something the Fed watches closely for inflation pressure from the labor market. They generally grew at a modest pace. There was rising health insurance premiums that put upward pressure on labor costs. And then the important part on inflation. What are they seeing in the Beige book here? Prices rose modestly during the current period. Input costs did put pressures were widespread in manufacturing, and that was and retail, by the way, also, and that was largely due to tariffs. Pass-through of higher input costs, however, did vary, and many companies, Brian, I don't know if you're seeing this in the company reports, were talking about margin compression or firms facing financial strains from tariffs, and firms were expecting upward cost pressures to persist, but plans to raise prices were mixed. So a lot going on there, Brian, in the background when it comes to, say, an effective AI through there, but also these effective tariffs. We don't hear or talk a lot about it because it seems to be going on in the background on the balance sheet of companies' books who are dealing with these tariffs. Brian?
Yeah, and the food assistance, let's hope that's a one-time thing because it was right around the time of the government shutdown. Steve Liesman, thank you.